All right, good morning, everyone. Good morning, good morning. Hope you're having a nice trading week. If you are not, it's just one of those things. Just relax. The markets would, start fulfilling the technical levels you are looking at. Okay, so this is a day after FOMC, and I released this article yesterday on my blog. You can visit www.sogcap.com. Okay, you can visit www.sogcap.com to read, most of the commentaries I give on the markets, especially the US economy. SOGCAP.com. Yep, there you go. All right, so yesterday we had the FOMC, the most awaited FOMC. And, I might say um the the results or the data that the Fed gave us yesterday was much expected. I mean, if you have been following the macro story for a while, the US, you'd realize that, whatever they said, they basically had to say exactly what they said. I mean, inflation has been high. The labor market has not been, doing so bad. And so it was right that they had to be a hawkish hold. Okay, that's a tone that we had yesterday. So yesterday the decision was the Fed left rates unchanged. The rate is still 3.50% to 3.75%. Now, you have, as you can see my title, I said Fed July 2026, they held, but three members wanted to raise rates right now. So out of the 12, Fed directors, nine wanted to hold, and then three wanted to hike like immediately because they think inflation is a big issue at the moment. So let me quickly go through what I've written. The US Federal Reserve announced its interest rate decision on July 29, 2026. They decided to keep rates exactly where they are at 3.5 to 3.75, like I said. But the way they did it tells a much more interesting story than the headline number suggests. Out of the 12 members who voted, nine voted to hold, and three of them voted to raise rates immediately. That three-way split is the most divided the Fed has been at any meeting this particular cycle. And it's sending a very clear message to anyone trading dollar pairs, gold or Bitcoin right now. Now, in this post, we are going to break down exactly what happened, why it matters, and what you should be watching next. Okay, so what exactly does the hold mean for you as a trader, as a CFD trader? Okay, when the Fed holds rates, it means they are not changing anything today. Interest rates in the US stay the same as they were before the meeting. But here is what many traders, especially beginners, do not realize. A hold is not always a neutral decision, okay? The way a central bank holds rates and what they say while holding can be just as powerful a market signal as an actual rate change. So it's not just about the headline, Fed held rates. No, you have to go deeper. What exactly did they say with respect to day holding rates? That is where the clue is. A lot of retail traders, a lot of CFD traders, they just look at the headline, they just read the headline, Fed hike rates, Fed cut rates, then that's all. They just jump to the market. They want to see the market move in that particular direction. But you see, when you get into the data, when you get into the details, that is when you realize exactly what they said, with respect to the headline. And that is why sometimes you see an initial reaction, and right after the initial reaction, let's say a day or two after, the market just reverses and then just continues in that particular reversal trend for a very long time. It is because the clue was in the statement, not the headline. So sometimes the headline can say one thing, but when you go deeper, you realize that wait, what the headline is saying is not even what the Fed is actually looking at. You get it? Yes. So yesterday's hold was not neutral at all. Like the way people think, oh, the Fed held rates, so it means the Federal Reserve is neutral. No, it was the most hawkish hold possible without actually pressing the hike button. Okay, so why is it that the three Federal Reserve um, executives who dissented is a very big deal? So a dissent is basically when a member of the Fed's decision-making committee disagrees with the majority and votes differently. Now, like I said, three members dissented yesterday, and all three of them wanted to do something more aggressive, not less. They wanted to raise rates by 0.25% right now without waiting. Now, here are the three. That's the Cleveland Federal Reserve, the Minneapolis Federal Reserve, and the Dallas Federal Reserve. Now, to put this in simple terms or in basic language, imagine, let's say you are in a room of 12 people voting on whether to turn up the heat. Okay, now nine of them say not yet. Let's wait and see. Now, three of the people you are in the room with, they say turn up the heat right now. It is already too cold. That is the situation inside the Fed today. The three who wanted to hike right now are not junior members. That is what I want you to know. They are senior regional Fed presidents. When three of them are willing to put their names on record demanding a rate hike, it tells you the committee is genuinely under pressure on inflation and that the next meeting in September is very much in play for a rate increase. Okay, and with this said, when you take a look at the macro tracker on the SOGCAP.com website, you'd realize that the Fed CME tool, which tracks, interest rate potential changes, after yesterday's meeting and then for the next FOMC meeting, which is in September, the hike rates are now sitting at 65.1%. That is a big jump from the 30 point something percent before FOMC. Okay. So now, interest rate traders and the market is expecting the Fed to hike rates come September. Now, what will even put a lot of more juice into that is when the July CPI and the PPI comes in hot, comes in higher than expected. That would actually fuel, put more fire in the bats in the shoes of the Fed to actually increase, interest rates come September. Yeah, so that was basically what happened yesterday. Let me not bore you with, you know, talking a lot with respect to all of these things. You can go on their website, like I said, and go read the breakdown for yourself. Okay. So let me give you guys a little bit a quick what it means for your trades right now. So if you are trading any dollar influence pair, you want to be a hawkish hold with three cents. It keeps the dollar supported. So you want to be buying the US dollar. And then rates, it means rates are not going down and rates may go up in September. You see, the market reacts to what is potentially about to happen, not what has already happened. So you want to be buying the US dollar, looking for, good support levels on the market to buy the dollar and basically not sell. I know someone will say, but yesterday the dollar dropped. Yes, the dollar dropped yesterday because, the market was pretty much anticipating the Fed to not be, okay, should I say, most of the market participants knew the Fed was going to hold, and most people also knew the Fed was going to sound more hawkish than dovish. So a lot of people placed buy trades already, meaning they were selling GBP already, they were selling euro dollar already, they were selling gold already. So what happened is the market just dollar just dropped to shake out the weak hands. Those who were already buying the dollar, shake out the weak hands, and eventually we are going to roll over again because this is a very hawkish case for the US dollar. So if you're trading GBP you want to be selling the pound against the dollar. The Bank of England is not in the same hawkish position as the Fed. The divergence favors the sellers. Bank of England is sounding more dovish even at the moment. So with the Fed sounding hawkish and the Bank of England sounding dovish, that is two central banks going opposite directions. You want to be buying the dollar rather than buying the pound in this particular cycle. Now, the Euro USD, same story as the GBP USD. The ECB, the European Central Bank, is not signaling rate hikes, while the Fed is clearly signaling rate hikes. So you want to be selling Euro USD as well. Now, for gold can be a little bit mixed. Okay, gold usually falls when the dollar is strong. That is the correlation between gold and the dollar. But gold can also rise on geopolitical fears, and at the moment there is escalation of the U.S.-Iran war. Okay, and the Fed just confirmed the Middle East risk is actually very real. So for gold, we have to be extra careful. We have to be extra careful going into it. Although for me, from the technical perspective on gold, I am still bearish. I still see gold going below 4,000 and probably eventually hitting 3,005. I still feel the geopolitical issue might not actually affect gold in this particular cycle like this, and we are going to see gold drop, in price towards 3,500 ounce per gold. Yeah. So with respect to Bitcoin as well, high rates and a strong dollar are not a good situation for BTC, for Bitcoin. Bitcoin already broke. And when you take a look at Bitcoin and the monthly time frame, that's something I saw that I was really, 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 really scared for, BTC long-term holders because it broke a 5-year support level, this particular month. And the market kind of has retested it and is still holding pretty strong. BTC is still trading below this particular level. Now, this particular FOMC, it adds more downward pressure on BTC. So, I mean, I've already done a post on BTC where I said I see $50,000, BTC coming in pretty soon. And I think this FOMC has brought that downward pressure that we are going to see. And I wouldn't be shocked if Bitcoin, drops heavily, heavily towards the downside. Okay. So yes, so you can go on there, read. You can't be a CFD trader who wants to be extremely profitable and not understand how, the things that move the markets actually work. You have to understand all these things, not just the headlines. You have to understand how to go in depth into it and read. And that is why I created SOGCAPITAL.com to make all these things really, really easy for CFD traders because, I realized for so many years that all these mentors, all these gurus out there, all they teach is technical analysis. Nobody is actually teaching, fundamental analysis. Nobody's actually teaching macro, how to help retail traders, CFD traders understand the macro and, the fundamental and how to piece it together with the technical. Nobody's actually teaching that. Everybody is full focused on, technical jargons and all of that. Technical analysis has its place, but if you understand macro and fundamentals, it makes your technical makes a lot more sense to you. You understand? So if you are seeing a technical setup and it's lining up with a macro direction, it makes more sense to you. It gives you more confidence to invest in these markets that you want to invest in. All right, so go read. I'm going to jump on the US dollar chart pretty soon and show you guys exactly, where we could potentially see buy entries from on the US dollar. And then yeah, we can do whatever you want to do with it. And like I always say, everything I share here, it is not for investment purposes, it's for educational purposes. If you want to do anything based on the opinions I give on my channel, then you would want to do your own research as well. Stay safe and be blessed. So I'm going to switch to Sorry, I'm not done. I almost thought I was done. I'm going to switch to the DXY chart and then I'm going to, analyze and let's see, post FOMC, how the markets are looking like this morning. And today there's PCE. Yes, there's PCE. And PCE is also, one of the major gauges for the Fed when it comes to inflation. So today too, the market is going to be a little bit erratic when it comes to volatility. Yes, so just be careful out there. I'm gonna switch to DXY, pretty soon, pretty soon. Yes. All right. So we are pretty much back to the what's the name back to the chart. This is the DXY. This is the DXY. I'm on the 4 hour time frame right now. You can see I have some levels marked. Yeah, pretty much. So this was the drop from FOMC. This was a drop from FOMC. Markets dropping below 101 price level. Yeah, I mean, it is what it is. If I drop to the 1 week time frame, which I always tell you guys, it's my go-to time frame. And let me tell you guys something. Um, whenever I do macro and fundamental thesis, I love to see if the weekly time frame lines up with the macro. The weekly time frame is my go-to time frame. If the weekly time frame lines up with the macro, I have a long-term position to hold until the macro shifts, which will eventually shift the weekly time frame. So currently, looking at the current direction of the dollar index on the weekly time frame, it has been pushing higher. It has been pushing higher. We are bullish on the um on the weekly time frame. On the daily time frame, from yesterday's move, the dollar index has pretty much shifted lower. On the daily time frame, we have a bearish case on the daily time frame at the moment, which is moving opposite the weekly time frame. But that shouldn't be an issue because long term you're looking at buying the US dollar. On the 4 hour time frame currently, because of the drop from FOMC, 4 is currently bearish. But then, of course, I'm expecting to see, probably going into the end of the week, I'm expecting to see a potential shift, a potential shift on the 4 hour and a confirmation. If I get a shift and a confirmation, I'll start, buying the US dollar again around this particular 101 price level. Yep. And then I'll be expecting, potentially expecting the dollar to now trade freely into 102, 102.5. I think this particular 102.5. Yeah. So these are my next level targets on the US dollar, 102 and 102.5. As if I get the technical confirmations I want to see. So this is how to piece the fundamental, the technical. After understanding where the fundamental sits, I now come to the charts to see, okay, does the chart align with the fundamental? And of course, currently my weekly time frame is bullish. That is always my overall time frame, and that is the time frame I want to see align with the the macro. Okay, the daily is bearish. Yes, the daily is bearish because of yesterday's move. But like I said, yesterday's move was it happened because the market has to shake out the weak hands. There are people who bought early, who got in early, and the market had to just come in, shake them out. And then by the 4 hour time frame, which is also my direction for the week, is also bearish at the moment. It's also bearish at the moment, yeah. Yes, so we have the weekly being bullish, daily bearish, 4 hour bearish. So what I'm waiting for is for the 4 hour to shift bullish. Okay, if that happens before the week ends, great. If not, then we expect it to happen next week, God willing. 4 hour, yep, and then a confirmation. So one thing I want to tell you guys is not every change of structure or change of state is actually right. You have to wait for a confirmation. Once you get a confirmation, that is when you execute the position. So sometimes I see a lot of traders, when the market shifts position, they execute and the market falls right back and they are wondering, but there was a change of structure. No, you didn't wait for confirmation. Wait for the confirmation because not every change of structure is a change of structure. Sometimes it is just the market taking out, stop losses at the top, then it drops lower again. So once I see the dollar index give me the change of state I'm looking for, I would want to see a confirmation. Once the confirmation happens, that is when I would now potentially look at buying the US dollar and then holding it going into the month of August, probably even into the next FOMC. Yeah, so that is it. That is it. Technically, like I said, I'm still bullish on the dollar. Weekly bull, daily bearish, 4 hour currently bearish, waiting for the 4 hour to shift. And that when that 4 hour shifts and it confirms, there's a possibility that it could potentially come and then take out the recent highs created on the daily time frame. So that these particular levels will be something to watch out for. To be something to watch out for. The most recent daily highs. Yeah, something to watch out for. I'm sure the market will struggle pretty much a little bit here before it potentially, breaks out and goes higher. Yeah, so that is it. Let me not make this particular videos too long. That is it. Stay safe, be blessed, and trade safe. Okay? Peace. I hope this helps you guys out there truly. And don't forget to subscribe. Don't forget to subscribe and share the video with your friends and family who actually want to understand, what goes on behind the scenes because I'll be doing a lot of these breakdowns and a lot of these market analysis on here. Bye bye.